Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is doing well. We've got an interesting week to kick off, in that last week brought some shifts, not only in price, but also in macroeconomic clarity. Probably for the first time this is November, so I'd say since summer, we're looking at an FOMC that is finally hearing the message from the employment side of the macro, not to mention what's being communicated via bonds. And for the first time in a very long time, we're seeing that the expectation for the rate cuts is sooner rather than later. And that's really been the main gripe of the long bond and really the 10-year as well. That Powell, we get that you had to hike, we get what you had to do with inflation, but we see inflation by your metric is coming down by your own admission. And at the same time, it does seem that your monetary policy, Jerome, is not healthy for jobs. And you put all that together, and what you have now is the pressure coming from Fed Fund futures indicating that, hey, you've got to cut sooner. And then finally, after the non-farm payroll miss, after what has to be considered a fairly dovish leaning FOMC monetary policy, as well at statement, and then the press conference that was really not undoing that expectation, we have a Federal Reserve outlook now that says, hey, maybe they're going to come back to reality, to the economics of Earth, as opposed to wherever they have been. And we're going to see that the rate cuts are coming, at least one to two rate cuts by July. That's what's being factored in. So this is good for equities. And so I could say it's good for equities, but let's be specific, because I've been sort of harping on this, not only generally, but for myself too, to break the habit of two things. Gotta kill the dogma, gang. Let's quit carrying around with us this notion that certain things, because repeated over and over, three things come to mind. One, sell in May and go away. And I hope I've obliterated that. Two, because again, it's a repetitive expectation that really, in many ways now, has superseded what we're actually seeing, right? When expectations are traded, not what we see, problem. The second one is the equity markets can't rally if the dollar is strong. My gosh, if that is not true. But which equity markets have been rallying? Well, that's the third one, which is there's no such thing as the markets, right? If I take a look at the NASDAQ and I take a look at the Russell, those are two very different composition, very different groups of stocks. One is small cap domestic, one is tech and communications and consumer discretionary, and they look markedly different because they are markedly different. One does not lead the other. Y'all know what I'm saying. The Russell leads nothing but the Russell. And until KRE, by the way, can get out of its own way, the Russell's going to have a difficult time recovering. But that being said, we also got a really great microcosm of the tax loss harvesting behavior that we could see here in about 4 weeks, right? As we go to the second half of December, the tax loss harvesting could become a little bit more pronounced, which is to say, most simply, if I look at tax loss harvesting and window dressing as sort of the techno babble of the end of the year, they are very real phenomena that could be basically reduced to a very simple: strength gets stronger and weakness gets weaker. And that's what we're embarking on, gang. That's where we are. So it's been a wonderfully boring market so far in November. It's been far better on predictability of follow through than a lot of October. I did not feel that way a week ago today, but the remainder of last week, Tuesday, Wednesday, Thursday, Friday, were exceptional. And I'm looking forward to continuing some short-term trading along with some swing trading. So this continues to be a really, really good month. I know it's early, but why not stick with the positive? So remaining bullish, right? Where have we remained bearish? Regional banks, Russell. Where have we remained bullish? NASDAQ. What's kind of on the fence now? Well, with the rally in financials last week above some key levels, it's easier to be a little bit more bullish in the S&P. It's easier to be a little bit more bullish on the Dow. So think about the composition of the indices. Think about the way in which we're gauging follow through in the S&P, NASDAQ, Dow, Russell based on those heavily weighted sectors, gang. Remember, index, sector, stock. You stick with that, and then you realize what I'm saying, which is, hey, gang, we could be bearish in certain places, but we've got to be bullish in others. And hopefully we're killing dogma because, I'm just dying to find out what folks who've been telling us that, we're just circling the drain because of inverted yield curves have to say now, right? Remember, gang, this one thing to be an analyst. Nothing wrong with that. But you're not here listening to me because I'm going to sit around prognosticating about what could happen. This is what we're doing right now, right? This is the way that I'm viewing the equity markets, the indices, the commodities right now. Oh, speaking of commodities, one place that has continued to struggle, and frankly, I was looking for a lot more stability here, but we're not seeing it. So again, we can have expectations based on the market structure, but when those expectations don't turn into follow through, we don't have clarity in that corner of, in this case, sectors, energy stocks, really, really wacky. Crude oil has been struggling too. So as much as I've loved this corner of commodities, energy, and sectors, XLE, OIH, even XOP, got to tap the brakes here until the clarity comes back. And it's been a rough October for these four symbols: crude oil, oil and gas explorers, oil services, and energy. I'm not giving up on these, but when the route to the targets become untenable, so too is the trade, right? Trading is not picking a target. Although listening to most analysts and most of financial media, it looks like that's all you got to do. Oh, XLE will hit 95. When? In 2027? But does it go to 75 first? That's what I mean by untenable, right? That's the difference between analysis and trades. Trades are the path to the target. And so if we keep that in mind, we will be able to find those opportunities. Right now, probably not my favorite corner. XLF, though, let's keep an eye on this one. Very, very excited about finally seeing big banks get out of the downtrend that they have been dominated by through October. It's still a little too early to say. We're just wobbling to neutral. But this time, the wobble, unlike the wobble we saw. So you might say, Rog, what's the difference between the little patch of yellow multi-trend there October 17 versus what we're seeing here in early November? This patch of yellow going from the downtrend to a neutral environment actually accompanies the break of the 200. And that's a big deal, gang. So we'll keep an eye on that. So as always, gang, best part of the show is your questions. So let's get to them. And I still got to work up my notes for this week before we get into the mastery. And by the way, I will see you all in the futures room this morning, by the way. So heads up for that. Okay, so let's get to it. First up, Nacho, how are you? Lots of neutral trends in the 5-minute charts this morning. Right, you are. Yes, lots of neutral. And I don't mind the neutral, right? So Nacho, what I'll do, well, let's pull this up, right? I love that you're looking at structure, by the way. That's fantastic. So let's take a look at the 5-minute. There we go. And looking at the 5-minute, let's do this on our trading view charts, shall we? So I've got my hourly price movement range here. I love my trading view charts, by the way, gang, because when I'm placing my alerts, when I'm placing let's take a look. When I'm placing my alerts, when I'm tracking the price triggers, when I want an alert to my phone, it's just fantastic. And on my phone, I can get, and I don't think I can do this with any other platform. On TradingView, I'm able to see my indicators, my layout. So when I pull up my HPMR, DPMR layout on my phone, I can see the hourly price movement ranges. I can see my 200 propulsion. I can see my multi-trend. And it just makes me feel like when I am making any kind of decision remotely based on my phone or based on, managing a trade on my with the charts on my phone, I don't feel like I'm just having to deal with whatever it is that the phone will allow me to see. I've got, and this is actually this is what the Nasdaq. Yeah, I don't know if y'all can see that. Look at that. That's awesome. So anyway, let's take a look here. So yes, we have the neutral trend, but it's interesting, Nacho. Before the neutral, we were bullish. We were bullish for a little bit before 3 a.m. Eastern. You can see that here. We were bullish again a little bit before 6. So definitely neutral, but maybe bullish neutral. And another reason I'd say it's bullish neutral, Nacho, is looking at the NASDAQ. We're trading above the previous session close. We're trading above the 200, right? We've got some key levels that we're trading above there. And then let's see here. Take a look at the S&P. Same thing, trading above the previous session close. Neutral, as you pointed out, trading above the 200. Gotta love that, right? And then the Dow, neutral, above the 200, above the previous session close. So when I start off my trading this morning, looking for setups, we're going to be looking for setups to the long side primarily. Doesn't mean that I can't short. I mean, we are neutral. So it's not long or nothing. It's not as if I can only buy. But since it's neutral, with those sentiment reads indicating that the path of least resistance is still to the upside, I'm feeling pretty good about focusing on the long side for the bulk of this morning's setups anyway. So let's see what happens. Now, as far as Amazon and XLE, Amazon's going to be a matter, Nacho, of NASDAQ, XLY, and then Amazon. XLE will be primarily crude oil, and then XLE. So I would want that alignment if I'm going to go that route. So I don't know yet. Nacho, I know that I'm going to start at the top of the food chain. So if I'm bullish the NAS, and then once the bell rings, I'm bullish, say XLY, right? So I'm going to go right down the list. And then if at that point as well, I say, okay, bullish NAS, bullish XLY, then individual stocks like Amazon could be open. All right. All right. Moving on. Let's see here. All right. Bear with me. NVIDIA. All right. Can we take a look at NVIDIA on the 5-minute? Sure. Sergio. Yeah, sure. So if I look at NVIDIA, let's think about NVIDIA from that same index sector stock, right, Sergio? So when we think about NVIDIA, we think about the NASDAQ. We can also, if you've never done this with, first of all, I'm not a big fan of having favorite stocks, right? I'm not a big fan of saying, hey, I have a favorite stock and what is it doing today? Or even a favorite index, what is it doing today? My favorite is whatever has the probability of higher follow through. So when I think about NVIDIA, I'm going to think about SMH, right? So let's think about NVIDIA from the standpoint of how it would fall into whether or not today it may be a favorite. So that starts us off with the NASDAQ. That moves us on over to SMH. And then lastly, and the stock is at the very bottom of the list, gang. The only time the stock can kind of elevate to being more influenced, being more of an influencer than influenced, is when it has earnings or news, where the importance of whatever's happening in that one stock is disproportionately so large in terms of points that it's able to influence a sector and it's able to influence the index. Otherwise, top down, right? Index sector stock, NASDAQ, SMH, NVDA. So once I can fulfill that, Sergio, then I can say, yeah, I like it. Now, NVIDIA does have, obviously, it left Friday with a good degree of bullishness. pre-market, when you take a look here, let's open up the pre-market. Let's go to the daily here on these trading view charts. Obviously, pre-market, we're trading slightly above the previous session closed. That makes it bullish. So if all those criteria fall into line, then yeah, I like that 5-minute. But then, again, I always want to ask myself, what is it that the stock is doing that deserves our attention? And am I prioritizing trends? In which case, yeah, Sergio, most definitely you're prioritizing a trend here. And that's where we're going to find our follow through. So if we think about why years like 2020 were so great, clearly the monetary policy supported the uptrends we got, but it was the trend. It was the uptrend specifically, right? So that's something to keep in mind. And bot, do I see the questions coming from TradingView? I don't, right? So my TradingView folks, yeah, for whatever, I'm using a third-party streaming to be able to see. Actually, let's go see here. Let me go switch on over there. Let's see. Kai asks, Casey, KAI, daily long entry at 425.76 with a stop loss at what's you're asking me about that trade, KAI? All right, so let's see. Let's go back on over to the charts. So anytime we break something down, I'm going to think about the time frame. So let's start with that. Now, in terms of trading a stock that's having a bullish momentum, right, cadent, again, I'm going to go back to index sector stock. It doesn't really make a difference, right? So if I'm going back to index sector stock, and I'm going to do that with KAI, I'm going to take a look at whether or not it's high concentration weighted. And I actually do not know of, I'm trying to think, I can't think of where it would be high concentration weighted. This would mostly be considered a small cap stock, and most small cap indices and small cap sectors are not high concentration weighted, which is to say one stock doesn't have a disproportionate impact on the broader sector, or in this case, the broader index. However, that being said, I'm sure this is a great momentum play. Not something I would personally want to chase. Premium value is going to be pretty high. And ultimately the movement's going to be very much in line with volume. So I'd keep an eye on some volume, maybe some intraday volume profile levels, which, obviously if I were to pull this up on a 1 hour, you get those gorgeous visible range volume profile levels on TradingView, which I love. That's one of the main things I do love about my TradingView charts that I can't do in some of my other platforms, which is that visible range volume profile. And on the 1 hour, if I pull up, say, the last handful of days, heck, let's just pull up October, right? If I pull up October on a 1 hour chart, you can see here 225 is a big level, right? 225 is a big level. All right. Last question for the morning. What's up with UPS? What's up with UPS? So it's in a downtrend. Nothing's up. Nothing's up with UPS. It's in a downtrend. And that's on the daily that I'm looking at right now. It's been in a downtrend since late August. So nothing's up at all. This is short the rip. Yeah, this is short the rip. All right, cool. All right, gang. So that's a wrap. I will see you all tomorrow, same time, same station. I'm glad Bot did, Lorna Bot, for those of you that don't know who I'm talking about, the bot. Lorna Bot did mention, yeah, thanks, gang. So we're just testing out some of these things on TradingView now, the TradingView stream, and whether or not I can see the questions from TradingView through the platform that I am using to stream, and it does not appear that I can. And I don't know that my Twitter questions come up here either. So if you're typing in a question on Twitter or TradingView, please know I'm not ignoring them. And thank you to Bot for checking that, because clearly she noticed I can't see them either. So yeah, that's something we'll figure out. But in the meanwhile, thank you as always for being here, and I'll see you tomorrow. Same time, same station. All right, gang. Be good to each other.